Hi everyone and welcome to this YouTube channel. In this video, we are going to talk about how to make money with trading. So before starting this video, please like this video and subscribe to our channel future updates. How to make money in the stock market with little money. It is true that you need money to be able to make money. One drawback of the stock market is that commission fees can make stock market activity unattractive. Several brokerage accounts have offered freemium models with free commissions. But the true cost of these shows up elsewhere. I wouldn't recommend to use brokers such as Freetrade and Trading 212 because the service and quality of execution are much poorer than the higher-priced brokers. Instead, one option is to invest in passive index tracker funds. These are low cost and don't require significant investments in order to get your stock market journey started. Individual stocks require commissions on every deal, so a buy and a sell will cost you 2 commission charges. How to automate stock market buying. To automate your long-term stock market buying, you can simply set up an instruction with your bank and your broker to purchase the same monetary amount in a fund every month, which should be commission-free. This has the benefit of dollar cost averaging, a term used to describe the smoothing of the average price over time. For example, let's say you are adding PS 500 each month to an index fund. In month 1, the fund price is 100p, and therefore your automatic purchase is 500 units. However, in month 2 the price is now 120p, and so the automatic purchase is 400 units. But if in 6 months the market crashes and the price is now 50p, that means the automatic purchase will be 1,000 units. Should I buy index tracker funds or individual stocks? Beauty of ETF and index tracker funds is that they track the market and do not require active participation on your part. Passive investing in the stock exchange has many advocates. However, picking your own stocks can lead to outperformance in the market. For those that are willing to take on extra risk and put in the time, the rewards can be far higher. You must make a decision on whether you want to pick your own stocks, because if so, then it requires time to research and understand a company and its industry. There's nothing to stop you from investing in index tracker funds such as the FTSE and S&P and picking your own stocks. Should I buy mutual funds? A mutual fund is an actively managed open-end investment fund that takes outside capital to purchase assets such as stocks and bonds. In short, you deposit your money with a fund manager and his recommendations to beat the market. However, very few money managers beat the market. Despite this, fund managers are earning money even when the fund loses money. In my opinion, you should either pick your own stocks or put your money in passive low-cost index trackers. An investment advisor is unlikely to recommend this because they won't receive the commissions from clients with a high allocation in low-cost trackers or robo-advisors. Both mutual funds and index trackers are available to buy in your brokerage account. The dangers of stock market investing. The response to the global pandemic in 2020 was to pump more money into the system. Employees' wages were paid on furlough and businesses were given loans in order to prevent an economic collapse. This has led to huge numbers of beginner traders and investors getting involved in the stock market as they are sat at home bored. The strength of the market rally in 2020 and early 2021 has put money in the pockets of many new traders. But the stock market is filled with danger. Not every market recession sees a huge bailout. Stock prices don't always go up. It is possible to make money in the stock market through discipline and consistency. Here is a step-by-step walkthrough on how to get started. How to get started in stock trading. 1. Educate yourself about the stock market. It's important that you understand enough about the stock market to know the nature of the game you're playing. For example, many new investors become so enamored with a story they don't bother to check the financial statements. You wouldn't buy a car without checking under the hood, so why should it be any different when buying a stock? You can educate yourself with my free trading ebooks and my step-by-step walkthrough articles here. 2. Define your goals in the stock market. Everyone has a goal or an ambition. It may just be considered a dream and unrealistic, but everyone has them. Whether it's to quit working and become financially independent, or to give your children a better future through schooling, or to take your partner on a world cruise. These goals are all tangible, and they are all achievable. Becoming specific in what we want will not only give ourselves a goal to aim for, but it will help to motivate us when completing mundane tasks or when the market is not bearing much fruit. There is a trick I learned from neuro-linguistic programming. It's simple and yields powerful results. The next time you find yourself struggling to stay motivated, or are tempted to skip the next trading day, or even keep our trading areas tidy, you must think about the bigger picture. Think about the end result, not the activity itself. Completing our journal will teach us something new about the day, which is one day closer to our goal. Going over our charts may find us an excellent trading setup that we otherwise would have missed. Tidying our work desks will mean we have a stress-free and calm feeling. Achieving these all help to progress us towards our goals. Acknowledging that small tasks are active steps towards what we really want is a powerful technique to motivate ourselves and keep the bigger picture in sight. Get specific about your goals. Defining your goals is a great start, but you need to get specific about them. When do you want to become financially independent? How much do you need to put your children through school? Which cruise would you like to go on, and in what year? Once you have these answers, what do you need to do to achieve them? When we have an idea of what we need to do to achieve them, the overall picture can be broken down into smaller goals and milestones. It also makes the goals real. Systems for goals. Goals are great, but it's now time to focus on the process itself. This is ultimately what will drive us there, and our successes and failures depend entirely on the quality of our systems and processes. 3. Become a risk manager. It is tempting to think of how much money you can make in the stock market when starting out. I know, because I did. Rather than thinking about how much you can make, instead focus on how much you can lose. Amateur traders think about how much they can make. Professional traders think about how much they can lose. By becoming a risk manager, you are relentlessly focused on risk tolerance through managing your downside and instead keeping the risk to the upside. Thanks for watching.